there couldn't have been a better panel to discuss this issue. These are absolutely I'm trying to find the right adjective for this. These are the big boys who have been leading the solar in this country. The trajectory which has Indian solar sector has taken is something which is phenomenal. Also, they are the active practitioners, except Rahul. Rahul is the one who's done a lot of work on the policy side of it. But also, this is a sector which has taken off like anything. The Prime Minister has been talking about it for a while now. Also, the kind of uh, the numbers that have in gigawatt size scale numbers which are already out there. A lot of investment coming in, and I'll not take much of your time, given that I'm sure we are all been waiting to listen to them. I will put my first question to Mr. Gurdeep Singh. He has been at NTPC, India's largest power generation utility. He has been leading the charge on that count. And so to say that the difference between an electron and a molecule is kind of a difference that some companies used to call themselves a power company. Some companies used to call themselves a hydrocarbon company. So how has that divide been bridged? And also perhaps something that you would like to talk about what you did at NTPC, given that one of the biggest IPOs is now coming off your subsidiaries as well. So but if you would like to please share your thoughts with the audience.
Thank you, Utpal, for inviting. First of all, the caveat, let me take Jain before saying anything, that I will not be able to speak anything for that IPO because of the restriction which has been advised. But anyway, I think we all have studied in our school days that one form of the energy can be converted to the other form of energy. And energy is, electricity is also energy. Hydrocarbon is also source of energy. And the eternal source of energy is none other than the solar energy. That's what we are talking about. So I think if we just, because this session is for solar, how to harness the solar energy, which we had been using for ages, but in a meaningful way to convert this into electricity or some other form, like including the heating and cooling or the other process, which can substitute some of the electricity requirement. So in my opinion, I think we should start I think the basic difference, what solar energy means, solar energy, not the electricity. And we should keep that in mind. So the question what you have asked at NTPC, what we had been doing, as all of you know that NTPC was established way back in 1975, and we will be celebrating our 50th birthday very soon. But primarily, I think even today, many people who don't go in detail probably will be knowing us for the National Thermal Power Corporation. And on a lighter side, not to even I get even formal letters at the National Thermal Power Corporation, though we have changed the name quite a bit. But what our endeavor is that how fast we can transit without the consumer knowing that what is the source of the electricity, what he is getting. Decarbonization and ultimately the transition to net zero is going to be the reality. The question is that how much time it is going to take. So the whole question is that the transition, how much time it will take. And in fact, there has been transition from one source to the other. Before the coal was being used, I think it was a kind of wood which was being used, then the coal came, then the oil came, gas came, I think then and now we are talking about, and the I think the nuclear, then we should not forget about that, but I think the session is for solar, so let's talk about that. So our focus is to go aggressive on the solar side, uh, total and renewable, and in that renewable basket also on the solar side, and to create then something like 60 gigawatt by 2032. That's what our stated objective is.
Right. So what are you at this point of time, sir? What is the capacity?
At present, as of today, we have solar of I think 3.5, and there is another around 7.5 gigawatt which is under construction, and almost on a weekly basis we are commissioning some portion of it.
So will it
and
be
there is another 20 gigawatt which is in the different forms of the advanced development where the land and the connectivities which are being ascertained. So we are fully confident and geared to reach to the target of 60 gigawatt by 2030. In all probability, we will exceed by a good margin rather than only touching to the 60 gigawatt. Solar is going to play the major role in that. So whether it is coming in the Khavda solar megas and this energy park, or it is coming in this gigawatt size or the hundreds of the megawatt size across the country. And then along with that, there will be a pump storage and there will be battery storage and
the whole value chain?
and we are trying to develop our hydrogen hub at Pudimadka, where there was supposed to be a imported coal-based plant near Vizag, which we have the almost around 1,200 acre of land parcel, which we are developing as a hydrogen hub, which is going to be the right location. And for that, we will require quite a sizable amount of solar energy and to go with that.
What is the total, sorry, I can't help but ask this. What is the total capex that you're deploying towards this?
See, the capex is going to be like, you can take the ballpark figure of around 4 to 5 crores per megawatt as of today. But in addition to that, there is it's not going to be the only solar, but the solar will be going towards the hydrogen derivatives.
So what is the total corpus?
The total capex what we have planned by 2032 is going to be upwards of the 7 lakh crore from today.
7
crores.
7 lakh crore.
Yeah.
7 trillion rupee.
Yes, 7 trillion rupees.
Will it be fair to say that you're the largest?
If you want to go into the trillion, yes, the 1 lakh is a trillion, but I think that's what, if you prefer, then let's go with
that's very kind of you, but thank you.
In that, there is a substantial component of coal-based also. I have no hesitation to share that our energy needs, as we are growing faster, then our need for the 24/7 uninterrupted reliable power supply really requires some additional capacity. As you will be knowing that ministry has come out with almost around 80 gigawatt of the total capacity, additional capacity what we are to put by 2032, and we have the share of around 26 gigawatt out of that.
Right.
So which is roughly around 2.5 lakh crore will be going towards that, and the rest will be then kind of which will be coming to this.
Right. So now, it will be fair to assume that you will be one of the largest buyers of solar energy. One, you're not only been setting up solar power projects of your own, you're also buying a lot of solar power from some of, I'm sure, I'm not very sure that either you guys, the rest of the panel here have been selling it to you or not. You are. You do sell power to him. So then to that, my question would then come to you, Mr. Nimbargi, is that are the days of pure play solar, pure vanilla bids are over? Because there is this, so there was a time when obviously the tariffs took a nosedive. Now also hybrid, RTC, also storage bids are now coming out. Where do you see this? Because obviously that case, the business case point has been proven. Solar used to be at one point of time a CSR kind of a opportunity in this country, but now has become it's absolutely the kind of a business that large wealth funds, sovereign wealth funds, pension funds, people have been deploying, state-run firms have been deploying money in this. Your views on that?
Yeah, I think basically if you look back way back in 2008-9 when we saw solar tariffs at 17 rupees to now where we've come down to, that's what really been the backbone of driving the renewable energy in this country. But time has come now because the amount of solar penetration that we have today is actually leading to, daytime excess, and that's not really helping the grid. So end of the day, we need to make sure that the whole energy needs 24/7 are met. So solar energy part of it. So we have wind, we have storage, which are necessary now. So that's why in terms of the trajectory of the bids that we are looking at from the central agencies are more towards hybrid or, fixed dispatchable renewable energy or, round the clock. So these are the, type of tenders because energy transition cannot be met alone by solar. We need, other forms of energy to be able to supplement and take it forward. But having said that, solar on a standalone basis has a huge impact in terms of rooftop or standalone, solutions that is, getting penetrated. But I think we still have a huge opportunity there where that can make a huge difference in terms of, standalone opportunities in terms of getting the solar energy. But in terms of energy transition targets per se, I think it will have to be a mix of it. And as we see now, there is an increasing need. Also, what happens is that if you look at a substation today, where we just have the whole substation capacity is connected to solar, the whole transmission line is just getting utilized for morning 6 to evening 6. So now, we've been part of the industry, there's dialogue going on now, how do we enhance that? True. So the remaining capacity can then be augmented for wind or storage or any other forms. So one is that will at least, reduce the pressure on the transmission capacity. We'll be able to augment more transmission capacity with either utilizing for wind or storage and things like that. And additionally, I think in order to manage this, we are looking at substation-based storage projects and standalone storage projects. So solar is definitely going to be one of the main because that's a more steady form of, I would say, renewable energy, less variability compared to wind because wind we have a high wind and a low wind season. But at least solar, given 365 days, barring certain days, at least we'll have, generation there.
Yeah, but
So
we are
that
getting
stability is
we
there.
are getting into the days of fog as well, the smog
Yeah,
factors.
there are certain number of days, but at least you don't have like wind, you're running through a
Yeah,
patch of
the wind speed
complete
has been
low
falling
wind
down.
season. That's, of course, the business risk of renewable energy is always going to be on the environment.
Right.
So that is something which is there. But I think the forecasting tools have improved now. So we are
Right.
able to cover on the uncertainties and other things and have better, the models have been corrected. The future projections, are far more reliable now. And at the same time, weather, forecasting is getting improved in terms of managing the forecast.
The modeling is much better today.
Correct,
Right.
absolutely.
Right.
Absolutely.
I would like to get Mr. Manikkan in. In fact, and I'll come back to you on the funding part of it because obviously, I'm sure I'm not going to ask about your transaction, which is happening right now. It is one of the largest transactions in the space. There are not many, ladies and gentlemen, there are not many large platforms now left in the country. I'll come, my question to you is, so while we keep on talking about solar, and I've been, Mint as a publication have been reporting on this space for a number of years now, what is happening on the modules part of it, the basic building blocks of it? While there has been a move to develop the domestic manufacturing capacity, we still depend on, and it's pretty much out there that obviously without China, we wouldn't be able to build a lot of these projects. Domestic lines are coming up, but they are not as competitive. Today, if you want to go and, there's a premium that a domestic solar module will get. What are the challenges going forward? Because obviously there's a PLI scheme which is out there. So domestic manufacturers are getting into the act, but it takes time to build that kind of a scale. Your views on it?
Thank you, Utpal, for that question. So I think the supply chain constraints in the solar industry has been well known for most of the people here. I think initially it was, there were so many changes in the policies. There was custom duty, then we had ALMM, and now which is now become for sure. It's happened. It's in place.
Will it be, sorry to interrupt your chain of thought, will it also come in for cells? Do you see that happening?
I don't think it will happen immediately, but maybe 3, 4 years, 5 years down the road, it could happen, depending on whether we are going to put up that kind of capacity. I don't think we are there yet. So I don't think they will go that route. If we want to achieve this ambitious target of 50 gigawatt a year, then that may not happen immediately. So coming to your question on the supply chain bottlenecks, this in the last 2 to 3 years has been quite significant. There have been sort of a lot of uncertainties around whether this ALM will be extended, not extended, but at least now there is clarity that it is going to here to stay, and that is fine. And while the PLI scheme is promoting Make in India for the manufacturing of modules, which is also a good thing, in the long run, if the industry has to produce these many amount of projects, then you need to be a bit self-sufficient as well, and can't be dependent on just one country for sure. But the transition has been quite erratic in the way that it has created supply chain bottlenecks, and the fact that while the Indian manufacturers are gearing up the production, there is still shortage today. So for example, we were out last month to buy almost 200 megawatts of modules for.
What is the price you're getting?
I don't want to get into that, but it's in the range of 17 and a half, 18 cents, or 17 to 18 cents.
This is domestic.
This is domestic sales.
Right.
So if you were to import and do it after paying custom duty, you will probably be paying less, almost 2 to 3 cents, which is fine, which you assume that that's what you're paying for helping the Indian manufacturers build their business. If I assume that was the case, then I would say that even that's a fine strategy, but the issue is that it's not available. So today
There are no modules available?
modules are not available in the quantities that you want on a monthly dispatch basis. There are, like, for example, if you were to contract today, you would get modules for Jan to March delivery. But if I want something for October to December, it's a bit of a tight market right now. And that's because a lot of people sort of postponed their purchases. They didn't do much in the first quarter. They started doing more in the second quarter. So the capacities got sort of choked. So I'm presuming this is a very temporary problem. It won't remain going forward in the next year as a lot more capacities start kicking in by end of this year. So that's the hope.
A very quick question there. When you talk about ALMM, so also the way ALMM works is, ladies and gentlemen, I'm sure everyone is an expert here, but for those who are not like me, it's something called approved list of modules and manufacturers. So only those approved ones will be allowed to you can only use them from where power goes to the state-run. So that's the way it is structured, right? Please correct me if I'm wrong.
You can buy modules from people who are listed.
Exactly. So then after post-COVID, there was this huge concern about it has to be approved by BIS guys. So, and obviously they were not traveling from here to China. And they were supposed to take care of those, as in they're supposed to survey the factory and stuff and then sign off on that. Has that concern been taken care of? Any of you if you want to answer.
Sujoy can probably answer this.
Sujoy, would you like to take this question?
The specific question of modules not being available?
No, so one is modules not being available. The other one also this ALMM which has been nicely deflected, but this entire thing about the ALMM, BIS guys not being able to travel to China to approve the factories. Once only they approve, then they will get included in the list as well, ALMM list as well. So has that problem been taken care of?
So firstly, I don't think there is a shortage of modules, because if you look at the ALMM approved capacity, which is the government's data, there's 50 gigawatts of domestic manufacturing capacity available. And the average capacity utilization is about 20%.
So it's a huge line which is empty.
Yes. And the reason for that is the demand side is choppy. Solar panel manufacturing is a continuous business. And so if there is issues on the upstream side of the deployment, the customers will say, well, I don't want the modules now, give it to me after 2 months. You know, either you build inventory or you underutilize the line, right? And it's a variable cost business. 70% of the cost of the panel is variable cost. So it's an economic decision the manufacturer would make to either run and create inventory and block cash, or, which is what the Chinese do, or underutilize the line and incur incremental cost. And, you know, so as manufacturers, there's a constant debate going on. But the short answer to your question is, I don't think there's shortage of manufacturing capacity of modules in the country. There is currently a shortage of manufacturing capacity of cells in the country. Primarily, that has got to do with the fact that there was no clear policy signal from the government till March of 24. And a lot of the committed investments under the PLI people had deferred, waiting for this clarity to happen. So we were set back by about 18 to 24 months. A lot of the cell capacity is already under construction. And as per government's own estimates, we should be self-sufficient in terms of demand supply for cells by maybe the March 25 kind of time frame.
Not very far away.
It's not very far away. I mean, you look at all the capex which has already been committed by people who are either part of the PLI or outside of the PLI, right? Now, coming to your question on ALLM, I think whether the government's going to go and qualify manufacturing facilities outside of the country or not, I think you have to ask government that question.
We have been asking that question to the government. My question being that that was an overhang which was there. Has that been taken care of from an industry's perspective?
What's the need to qualify more factories? I would put it back
Which
to
is-
you.
yeah.
If the total demand in the country as of last year was 17 gigawatts of new installation, okay, this year we have done 12 and a half because there was a build-up on first quarter.
Right.
People knowing ALLM is going to go away, there was a spurt of imports and a lot of capacity came up. But even if you take the trend and say, okay, you're going to do 20 gigawatts, right? You got 50 gigawatts of installed capacity, what are you going to do with it?
Right. I would like to get Rahul into this. There's this trajectory which has been talked about. What are the problem areas that you see, which is like, I remember we were having a conversation, I think a couple of days back. What is there, is it all hunky-dory? Is it all, everything is in place? Or do you think there are concerns which are not being addressed at the policy level?
So I think solar is doing well, and the question is one of time frame. In the sense, let's just use 2030 as a straw man, that by then we have huge quanta of solar to be installed. Now these quantums of solar are so large that we will have to change how we utilize, price, signal, manage this much. So the fundamental issue is cost, price and value are not the same. So just imagine, I mean, we see this worldwide where you have negative prices on for parts of the year, and that's at quite modest volumes of RE. Now the Indian story has been solar heavy. You look at CEA's optimal mix report, 2:1, solar is to wind. You look at the RPO targets, you reverse do the math, you find out they're even more than 2:1. You look at our actual growth, it has been lower for wind than the targets would have wanted. Part of the problem is we are valuing things only on an LCOE basis, levelized cost of energy. So we don't look at the portfolio costs or value proposition that different sources will give. The second then, of course, is the time of day problem. So let's assume we do have, whether we hit 280 gigawatts of solar or more or whichever by 2030, we can't use all of that. So we're going to be in a particular situation in a couple of years, not today, not by 25, 26, 27, in a few years, whether that's 28, 9 or 30, 31, doesn't matter. You're going to be surplus heavily for parts of the day and still struggling to meet the evening peak. So that's the next problem sort of which solar faces. It's not a solar problem, it's an ecosystem problem, which is the buyers of your electricity. The weakest link, quote unquote, that people talk about for this entire chain is the discoms. So one, you've got the financial issues on the discoms, which obviously impacts developers, paying on time, etc.
Hasn't the discom issue been, it used to be a big problem. Has it not been resolved to a certain level?
It hasn't been resolved. Things have improved in many stretches. We've got certain schemes and pushes to try and clean up theirs. But a lot of the fundamental issues are still there where your tariffs don't cover fully loaded costs. So there's a little bit of accounting jugglery going on that's helped them, but it can't scale.
Right.
I don't want to get into that right now unless that's the key. But the second side of the DISCOM is they are in charge of planning and procurement. Till a few years ago especially, the mentality was one of surplus. Now they're saying, okay, I'm not surplus really, but solar and all is great. How does that help my evening peak? So then they're saying, okay, I need these specialized exotic bids with storage, hybrid, FDRE. They're not really fully firm. They're not solving all your problem. They're helping, but they're not taking you all the way. So we really do need a reimagining of our grid where we have to ask yourself, are we ready for that world where you could have nearly free power parts of the day and pay double of what you're paying today for parts of the day? Are we ready to signal that? Because right now we're socializing a lot of these costs.
In fact, a very interesting point. Mr. Singh, can this be done, what Rahul is suggesting?
What?
He has just suggested that how there can be free power during...
Not free, but very cheap.
Okay, very cheap power.
I think then if he would have been developer, probably the answer would have come very easily. Okay. So maybe I think she will be able to tell very clearly what we are doing is something which is kind of a balanced approach. And I think Rahul covered quite a bit, which is a factual things. But just to correct Rahul in this, we are not required to go to 28 or 20 now. We are here today for that problem. And I think there are days in the year when we are struggling to keep our coal-based assets to be at technical minimum. And incidentally, there was some kind of regulation which came that DISCOM can ask us to generate whatever they want. So that problem is today, it's not tomorrow.
Sure.
So
How do you deal with it?
I'm coming to that. So don't get surprised that either the enough storage has to come in the system or there has to be backing down on the renewable energy. And this chapter is a much bigger one. This is a full-fledged subject in itself. The ultimate solution to this one is going to be differential tariff, rather dynamic tariff at the consumer end. So the question what we should be asking is that whether we are ready
The consumer is ready.
as a consumer to pay the differential.
Because also it will then peak somewhere.
Absolutely. So when we are coming in the evening, when we are switching on our AC, whether we are ready to pay for more than 10 rupees or 20 rupees, and if we are during the daytime when there is enough solar and there is nobody at home, whether there are some people who will be able to enjoy that at a kind of almost negligible cost. So there is a huge requirement for the load shifting. The demand side management is going to play a major role in this.
Are you suggesting change in office hours?
I think after working from home, that question is easily answered.
Right.
Okay, if the
My boss should be listening to this.
differential tariff starts coming, I'm sure that the people will start finding its own solution. The other one is that we are recovering the total cost from the consumer, which is tilted towards energy side rather than the capacity side. So we are not really charging the actual capacity charge to the consumers. And that really incentivizes many of the consumers to use for some time of the year or some time of the day at not only at the connected load, but even more than the connected load. So, if I will not be wrong, then if I just request the people present in this hall to calculate what is the utilization factor or what is the PLF of your connection. So we ask the power plant that what is your
The
PLF, but we don't ask the transmission line that what is the transmission utilization factor of the transmission line, or what is the utilization of your connection. You have taken 10 kilowatt or 15 or 20 kilowatt, but you are hardly utilizing only for 10% of the time.
Very eloquently put. This is,
And just
yeah.
a minute. And if that is the case, that if you want the power on demand, then you should be ready to pay the premium for that.
True, true.
And I believe that is one of the major things which is required.
As a country, we are ready for it?
Why not?
Okay. Has there been some movement on this, some forward traction?
I'm not in a position to say that, but I think people like you and the conferences like this probably will go in a long way to create this awareness. And I think there was a mention about the rooftop solar, which is, in my opinion, the Kusum and the rooftop solar are two very good schemes.
Why hasn't it taken off then?
Again, I think the consumer tariff. The rooftops were put by the people who were trying to avoid the highest rate, number one. And the segment, let's say rural segment or another segment which probably could have easily put some, they were getting the electricity at a kind of much cheaper, or then kind of, there is no incentive for that. But I think the PM Surya Ghar Yojana should be able to push this very aggressively.
Right.
And that should help in a long way. The best part what is coming out is the battery prices are coming down very fast. So if there are 2 cycles, if it can be utilized, I think the Gujarat bid is around 3 rupees 70 paise or 3 rupees 80
The
paise,
latest one.
something
which
like that.
Yeah.
And if you plan your energy consumption in a way, that means you can have your energy source at, let's say, 7 rupees at a renewable power when you desire. If it is 2 hours, 3 hours, not 24/7.
True.
So those kind of things will start coming in. And what Rahul was saying about I think the DISCOM health is, all indicators are showing it is far better than what it used to be. But that does not mean that we have achieved forever. It's a work in progress every time what we go along. But the beauty of the solar and the renewable is that it is distributed in nature. So while for industry it should be kind of the major
Load
solar
centers,
parks,
yeah.
and the storage, what rightly mentioned that about the transmission line, I think she mentioned that. The transmission line, how we can utilize for more number of hours, same, the line load factor. And for the domestic consumers, there can be a rooftop which is really providing. I think this is a great opportunity for us. Until then, we are all here to provide anyway backup 24/7. In a good old days, the coal-based power station was called as a base load power station. I think Rahul and other consultants have coined a term called balancing power these days, the same power plants. So this is what is coming out, but rest assured that all the policy makers and the people who are at the helm, they are working hard in this direction to provide 24/7 uninterrupted power. That's
True,
the
true.
thing.
Obviously.
And you should be ready to pay for whatever the faster transition means, little higher premium. Thank you.
Right. Very eloquently put. Also, given that the political, as in, for any great idea to actually succeed, it's also about how politically acceptable that idea also happens to be. Also, given that electricity is such a point, it's a political it has become, many a times what has happened, it has become a political slugfest around electricity as well. I wanted to ask Mr. Nimbargi this question. The funding part of it, obviously the money coming in. Uh, we keep on hearing about these billion-dollar checks being written. Do you think that interest is still there, or it is kind of being petered down? Because now people are also, investors have also become a bit much more very savvy. They understand this market very well. Gone are the days when you needed someone, because obviously the early market risk have been taken care of. It's a very proven case in point. Do you see that, because we see some of these names, which while they have been scouting around for a long, they have never made that kind of investment. I'm not talking about the CDPQs or the RDRs or the CPPIBs of the world. I'm talking about others. We keep on hearing, there used to be a fund called Khazana which kept on looking around, but finally nothing happened there. Your views on that?
Yeah, I mean, if you look at the way the sector has grown, that and also the way the government has navigated the policy and regulatory framework, I think the navigation of the policy and regulatory framework by the government has really helped in terms of getting confidence to the investors. And that's a reflection in terms of the kind of investment the sector has attracted. And if you look in terms of the number of investors that are coming, you've been taking all the big names, but there are a lot of small names. A lot of investments keep coming on a regular basis, establishing platforms ranging from about 100 to 500 million. What we look at is a billion one, because that is what we like. But there are a number of platforms which are there in the country today between 100 to 500 million. And if you look at the investment opportunities around the world, I think India stacks out as number one destination in terms of investment here. Lot many people talk about the risks here, but if you just look at the track record of the government in terms of how the risks have been mitigated. See, Rahul mentioned about the distribution company payment issues. The biggest change that we got in the country was LPS scheme. Today, everyone, we hope it continues and there's not going to be any change in that. But, that's the biggest relief, and that's the biggest comfort for any investor to come in. And the type of interaction the government does, Ministry of New and Renewable Energy and MOP, on a regular basis, they hear the developer. There are monthly meetings. Though the pace at which the issues might be getting resolved might be little longer, but at least there's a forum in which things are getting. So these kind of confidence measures and things makes a huge difference.
I think, Shiv, you can also mention that any of the SECI or the NVVNL
Yeah.
PPAs,
Correct.
have you faced any problem anytime?
No, not at all, sir. And the master stroke, actually, thank you for reminding that, sir. The master stroke of the government was to bring in NTPC, SECI and NVN and others to give that required credibility and a shield, because the developers don't have to go to the DISCOM. Everything is through the TPA. That gets taken care. So where will you get around the world a 25-year PPA, fixed tariff and assured and everything else?
True.
Yeah.
But to which I have a question. Is it true that around 35 gigawatt, and Sujoy, I would want you to come in, is it true that 35 gigawatt of PPAs have been signed, but there's no PSAs in place?
So there is going to be some challenge in this, right, as I mentioned. So that is getting addressed as we speak. Okay. So what is now, being discussed and hopefully getting aligned is the bidding trajectory and the off-taker trajectory getting aligned, and we are looking at some kind of a blended tariff on a quarterly basis with an assured offtake.
Isn't that an idea which has been thought?
It's been there, I think now. See, thing is that we have states, we are a federal structure, so we need to get everyone on board. So I think with the RPO penalties kicking in and with the effort of, NTPC, SECI and all, they're talking in advance to the distribution companies to be able to have a roadmap, and a quarterly basis settlement. So I think things should really take off now, in my view.
Sure. Your views.
Just one point I wanted to add, Utpal, on your solar manufacturing was really, I think as a country, we need to focus on innovation and technology development, because we might build the capacities, but we are not, looking at the way the technology is really moving up.
Yeah, because by the time
unless and until we don't at least catch up with what is happening on the technology at the same pace around the world, the cost will not be there. Okay, that gap. So actually, we have to build some kind of a framework in the country to promote technology, innovation, development. Maybe I think we need to create some kind of a fund like what we did, CSR or others. Some kind of a fund has to come in to drive that. If not, we will always be following, and that gap will always continue.
So Sujoy, in fact, just to take this point, and then I'll come back to the question that I was, the 35 gigawatt PSA hanging. So what is this delta between the aspiration and ability that we have?
So I think China has built overcapacity of 4x, 5x of what they need, right? And they're using that to monopolize the supply chains. That's a very clear strategy they have. If you do a very objective assessment of the published cost of Chinese companies, they are nowhere near the low price which Mr. Manikkan is talking about because they're dumping, right? Jinko's published cost, 1Q24 is 15.7 cents all in. They're selling at 9 cents in the global market. They're selling at 27 cents in the US and cross-subsidizing with a lot of covert subsidies being given by the Chinese government to them, free interest for one. So if your debt cost is 0, 3% IRR is fantastic, right? How many people are going to invest in manufacturing at 3% IRR? Nobody. So I think the answer to this is you have to have a very clear policy signal from the government instead of flip-flops, right? Once and for all decide if you're going to link the energy transition with supply chain jobs, which I think is required. How will you get 1 crore jobs, if you don't link the 50 gigawatts with domestic supply chain, right? And this has to be looked at in a 15, 20-year view and not a next 18 months view.
Like a strategic decision.
So if you do that, and the Chinese did that in 2010, which is why they are where they are today, R&D has to move away from being CSR to being a risk capital, right? MNRE is taking some steps now, recognizing the need that, US has IRAs, India has their domestic manufacturing ambition, Australia is coming up with Future Made in Australia program, 22 billion Australian dollars. If everybody tries to create more of the same, this is never going to work.
True.
So short answer is yes, you have to look at technology which has not been commoditized and scaled up, which you can commercialize in, let's say, markets outside of China with all of the government support which is coming in towards domestication of the supply chain. The way to do that is to first think about R&D beyond CSR, right? There has to be a very structured academia industry connect. We've got a lot of R&D bets going on in the IITs and the Anna universities of this world, right? But they are not connected with the industry. Right? And the journey from lab to fab, there is a phase where you scale up the product and make it ready for high volume manufacturing. That phase is all about investing risk dollars, right? That's where the government has to step in to some extent with matching, support from the industry. And I'm glad to tell you that MNRE has come up with a program where they're looking at tandem perovskites in solar specifically. In this similar programs, I think in batteries also, where they are bringing in, money, giving it to somebody like IIT, and then asking IIT to bring in the industry.
So the interface happens there.
There is an interface, at least there's a realization that there has to be risk capital available for taking R&D bets, all of which may fail or some of which may fail.
But one should have the appetite for it.
But the problem is, when you bring in that money and say, demonstrate 20% IRR or show me how the money is going to come back, it may not come back.
True.
Right? And so that's where I think there is a realization happening. I would say we are taking baby steps.
Right. What about this 35 gigawatt PSA hanging?
I think, there is a 35 gigawatt PSA hanging and there is 50 gigawatts of projects, maybe not 50, but maybe an equal number of projects where you're waiting for transmission interconnect,
Right.
right? And that's where the challenge is when you say there are no modules available, because you have 50 gigawatts of bids, you've got these projects which are a backlog in terms of one is PSAs not being signed, and then signed PSAs where the grid is not available, and you keep getting extensions in your COD deadlines. So how would you plan a project and how would you plan manufacturing based on that kind of a demand cycle? I think there's a challenge there also.
Right. In fact, I think we are completely out of time. But I would open the floor for some questions. Please introduce yourself, the name of your organization as well, and please make it a question, not a commentary. If there's any hands out there, if not, I'll use this opportunity to try to get my news point out of this, and then we'll call it a end to the panel as well for this discussion. So I don't see any hands out there. Rahul wants to, you want to say something?
I mean, I just want to ask a question to the audience. In
Yeah,
fact,
please,
building
yeah,
on-
please.
How many of you have an electric vehicle here? Okay, some hands have gone up. How many of you have put up a solar to charge that electric vehicle? Oh wow, couple of hands. Now, it's not expected. In the sense, like you said, molecule or this, you shouldn't care. But how many of you charge your vehicle in the middle of the day? No hands went up. So this larger change is really a journey that India needs to embark on. It needs consistent policy signals. And we have to ask ourselves, what are the best instruments that work for us? Because you can't out-China China. And you can't compete with IRA because the amounts of money that PLI has are a tiny fraction. Just their hydrogen has a blank check on the open end in volume and $3 a kilo per support.
They have weaponized it primarily.
Sorry?
They have weaponized it. How do you fight that?
Yeah. So we have to figure out our niches, our needs, and the right instruments. And I think we also need to be able to take better risks. You talked about, show me this and R&D.
20% kind of.
Yeah, yeah. I mean, you cannot have all the constraints under the world in this fast-moving space. So the only thing is we need to have balanced risk portfolios. And I'm a little cautious every time someone says, I'll do risk reduction. What policy analysis teaches us is most risk reductions end up being risk transferences.
True. In fact, I really liked this conversation, given that you guys have given me enough ideas to occupy me for at least next week. Thanks a lot for taking out time for this. And thanks for your erudition. And with that, we bring this panel discussion to a close.